Good evening, everyone. This is Dom Tavella from the Lebenthal Report, and usually I'm here with my partner Michael Hartzman, but today is Cinco de Mayo, so I'm expecting that Mike is out there someplace partying. Uh, Thanks, Tracy Burns, for sitting in on Mike's behalf and being a co-host tonight. Some of you might remember Tracy, all of you hopefully do, a real veteran of the TV and interview circuit. Welcome aboard, Tracy. How you doing?
I'm great. You're calling the Italians on the on the Mexican holiday, right? We're not
Yeah,
out
well,
having
we're
margaritas.
not celebrating tonight. Well, not at least with tequila, anyway. I think you
Right,
and I are
exactly.
both about a good bottle of wine. But happy to have you, Tracy.
Thank
Happy
you.
that you can join me. So I'm not doing this
Thank you.
by myself. And we have a great guest tonight, one of our favorites that joins us on a quarterly basis. But let's start with what happened last week, Tracy. So, by any chance, do you have the numbers in front of you, Tracy? I
I
normally
don't. I know you do. That's usually your thing.
all right, so let me do it so our listeners and viewers can figure it out. So we had another good week. I don't know what's going on, Tracy, but
Hmm.
S&P up 0.92, just a little bit less than 1%, but 6% on the plus side for the year. Dow Jones up again a little bit less than 1%, 0.86, but up 3.8 for the year. The big winner, because it was a big loser for the year, is the NASDAQ up 1.12 last week, but up 8.3 so far this year. And I'll skip all the other ones I normally go through. Bonds have had a little bit of a tough time. Interest rates have climbed, bond yields have gone higher, bond values have gone lower, hopefully temporarily. So, what happened last week, Tracy? What do you think?
Well, I think you made like the best point on the call this morning when you pointed out where the Mag 7 are right now. And they're basically nowhere, right? So the market is so confusing, I think, for a lot of people that it feels like it's bounced back, but really it really sort of is in a weird, funky little valley still.
So we're clearly dealing with the uncertainty of the war, even though we're now in pause mode, and I will call it a ceasefire, but that changes by the minute. So the markets are rallying on potentially good news. But Tracy, you brought up a great point. A lot of people out there have the Mag 7, the Nvidias of the world, the Googles of the world, right? But those stocks have not really done all that great this year. So people are looking at the indices and go, oh, the index is up a lot, but my portfolio is not. Why haven't these big tech stocks performed?
I know. I think it's so fascinating. And I know we're going to get into it with our next guest about AI in the jobs market too. But is it that we're not seeing it yet? We have all this CapEx spending. So we're spending and spending and spending, but it's not truly into the economy yet. I don't know. I'm actually curious to know how small businesses are absorbing AI, right? You have a lot of mom and pop shops that still probably don't really even know what ChatGPT is, and then you have the others that have completely embraced it and made it so much more economical and official and all. So we almost have two sides of the coin out there in the AI world. But you had earnings last week, and between tech and the financials, it was pretty dang good news. You also had a Fed that, not surprisingly, did nothing.
Yeah,
And
the
I
Fed
right.
stood still on interest rates, right? We mentioned it a little bit that interest rates have gone slightly higher, but I think that's tied into a fear of inflation because of higher energy prices, right? Hopefully that comes down later this year. But you brought it up, Tracy. Earnings have been nothing short of remarkable. This whole idea that the economy is stalling and the economy is going to go into a recession, the evidence is just not there. Corporate profits, I heard an analyst today saying they could end up being at 18 times greater than what the market expected. Just tremendous earnings growth. I don't know how companies are doing it, but profits are pretty good.
Yeah, well, you got to wonder if like everyone's intentionally set the bar super low when we started this whole war overseas, right? Everyone was like, all right, this is going to be terrible. So we're going to plan on terrible. I mean, there's been a ton of cost cutting for probably the last 6 months or so now. We saw it in the jobs numbers. So is that what's playing into these numbers, right? That they're working lean and mean. Maybe these corporations are taking a better advantage of AI than we're able to see in these numbers. And as a result, they're being more efficient. Um, but I don't know, but it's been stellar. It's been stellar. And it's very hard. It's, again, a big juxtaposition out there, right? On one hand, you really do have war going on. On the other hand, the market is on fire as if it's, 1999.
Yeah, I always talk about the pendulum swinging, and it does
Mhm.
seem like when it's bad news, it just looks like the end of the world, and when it's good news, it just seems like it's going to be sunny days every day. But the reality is that sometimes that pendulum does come back and swing toward the middle. But right now, the markets are literally on fire. I don't know how long it lasts. I don't know how long before that pendulum starts to come back, and you would think at some point it will. But again, we are dealing with a pretty decent economy, pretty decent employment numbers. Inflation has ticked up a little bit because of this energy crisis. But the doom and gloom, and you bring this up all the time, Tracy, just don't even look at the news anymore.
Right.
Um, the doom and gloom that you get out of the press sometimes just scares the heck out of people.
Oh my goodness. It's actually, on some levels, I don't think it should be allowed. But because all you hear about is really, really terrible things and the mag set, like the tech stocks. That's all people really want to talk about. I remember back in my days on Fox, Stuart Varney only wanted to talk about the S&P and Microsoft. Nothing else did he care about. Nothing else did he think the world would care about. And that's sort of where we are right now. I feel like I'm also starting to see those little tidbits of, I just saw an article the other day on how your sleepy, well-balanced grandpa's portfolio is actually doing better than you would think. And I think that I have pointed this out time, over the last couple of weeks when Nick, our head of trading, sends out the weekly numbers that the growth in income portfolio is just doing spectacularly. And that goes to that point, right? That these are the times where you want that well-balanced, well-diversified portfolio.
So, and again, you've been involved in the press and you do a lot of interviews. And how many times did you hear that the 60/40 portfolio was dead?
Right,
Right? That
right.
basically all you needed to own is the Magnificent Seven, or in some cases they would say the Magnificent 10. But I brought up the Magnificent Seven as an index. It's only up. This is as of yesterday, but only up 1.3% for the year. Yet the S&P is up 6, the Nasdaq as a whole is up 8, and that's when we talk about expanding past just these 7, 10 stocks. You have to look at the economy and the stock market as a whole. This year you're really being rewarded if you have a broad-based diversified portfolio.
1,000%. And I know we're going to hear from consumer staples, consumer discretionary this week. And while, I joke, half joke that they may be some sort of barometer for what's going on out there, they're probably going to report decent numbers because people are still out there buying and they're still shopping and maybe they're trading down from whatever, a high end to a Walmart or something, maybe. But I don't know. The people that I talk to, clients that I've talked to, they're mad, they're angry that gas prices are up, food prices are up, but they're still I have a client in Aruba right now. I have a client that's planning, this summer trip to Europe, even though plane tickets are going to be ridiculous. She's going to kick and scream, but she's taking her family. So it's still out there.
Look, we've brought this subject up many times on this show, and it's the haves and the have-nots, right? And
Yeah.
so, if you have a job, you're still working, you're still collecting a paycheck, maybe you got a modest raise, you're looking at your 401k or your portfolio, and you're going, things aren't terrible, right? Things are all right. Those people continue to spend, and they're
Mhm.
responsible for most of the spending in the economy. And the have-nots are the people that are living on a fixed Social Security check, and that
Mhm.
check just doesn't go as far as it used to. So the good news for the economy is that people that have money continue to spend and continue to support the economy. The bad news is if you're stuck with a fixed Social Security check or pension check, it's harder. It's harder to make it ends meet at the end of the month.
Oh, yeah. And I think we are slowly, and I feel like this happens every time that we say the consumer's going to crack, and yet he or she doesn't. But we are seeing the buy now, pay later stuff get, increase. People are putting more stuff on, credit cards. We're seeing credit delinquencies go back up again too. Incrementally, but we are starting to see it. So you wonder if that is a barometer of things to come.
That's a great point, Tracy. We don't talk enough about it. I don't know if the press talks enough about it, but credit card delinquencies are up. Car
Hmm.
loan delinquencies are up. Not
Hmm.
dramatically, but foreclosures on homes are up. So yeah, there are people that are starting to struggle and trying to meet, expenses on a monthly basis. And let's not forget the Medicare copayment for drugs and cost of drugs higher, right?
Hmm.
So it is putting a burden on the economy. But as of now, maybe it's a combination of businesses figuring it out, how to cut enough costs to increase their margins, or people continue to spending, combination of both. The economy is muddling along.
One thing we haven't talked about, I think, in a while is the housing market. And that I think is still struggling because, to your point, interest rates are still higher. They're not coming down. I think from the street's calling for one, maybe two cuts. And that's hurting. It's harder for that first time buyer out there. It's harder for the kids to leave home, not speaking from experience or anything, and get out of the house to go buy something and get on with their lives. And so I think that too is still out there that we're not hearing a lot about anymore.
Yeah, and the idea that we're going to see dramatically low. Remember, we had talked the Fed was going to cut rates at least two times this
Right.
year. I don't know if it'll even be one if
Right.
inflation doesn't roll over and start to come down. So, a lot of stuff to go over. We have a great guest tonight, Jeff Oak from. Make sure I say this correctly. Vistage. He's the Vistage chair. I love what he does, what his company does. I'm going to let him explain it, but it gives us real insight into what the economy is gonna do, people's attitude, mood about it. Really powerful stuff. We'll be right back with Jeff Oak from Vistage. Good evening, everybody. Welcome back. This is Dom Tavella and Tracy Burns from the Lebenthal Report, and one of our favorite guests, Jeff Oak and I always get this wrong, Jeff, Vistage.
You said it right. Yep.
The miracles never cease. This is why I need Mike here. He handles all the tough work.
You did great. You did great.
Thank you, thank you. So you know how much we love having you, but just real quick, tell us what you guys do and why it's so important.
Sure. Vistage is the world's largest peer advisory organization and executive coaching organization in the world. We have 45,000 members in 40 countries, all of them running small businesses. And what we do is help those leaders um, become better leaders, make better decisions, get better results. We've been around for 70 years. Dun& Bradstreet has independently compared Vistage member companies to non-member companies on 3 occasions over the last 20 years or so. And each time, Vistage member companies perform more than twice, 2x better in terms of compound annual growth rate. So I love what I do. Great organization. And for this show, I always like to share with your audience. Small businesses represent 3/4 of all new jobs in this country. And the small businesses generate 50% of all national revenue. Those are huge numbers. And it's the engine of the U.S. economy. It's the little engine that's mighty in our economy, both when it comes to new jobs and revenue.
Millions of little engines, right?
Millions of little engines. That's
All
right.
pulling hopefully in the same direction. So, you guys just finished your first quarterly
Yes.
2026 report. So I'm going to give you an opportunity just to give us the highlights, and then we'd love to dig into it and get you some questions
Sure. And
out
then
there.
I want to give one piece of context that we don't always talk about on this, but I do like to call attention to it for the purpose of your listeners. The CEO Confidence Index measures sentiment of the small business CEOs. We survey our members once per quarter, gather the data up in the report that we're going to be talking about together. What the economists kind of accidentally discovered is that our index, which we partner with the journal on, um, turns out it is a leading indicator for the U.S. Industrial Production Index. You all know that's a very, very important index within the larger economy. It measures real output in the manufacturing and mining industries, as well as electric, gas, and utilities. And it's a key um, element or a key indicator for overall economic strength. And so the extent to which our survey is a leading indicator, it's statistically relevant by about 9 months. So what we're talking about here is likely what we're going to see play out in the economy early next year, 9 months hence. So, and I'm going to give a headline for this quarter's results to kind of capture the sentiment of small business CEOs, the return of uncertainty. One little factoid that we were talking about before we went on the air is the timing of this data collection. The data collection was from March 2nd to the 16th, so it was about a 2-week period. It so happens that March 2nd was 2 days after the war in Iran erupted. So CEOs taking this survey. The war had just erupted. There was tremendous uncertainty as to what the impact was going to be on the larger economy. And the result was shown in the index numbers. After climbing for 3 quarters, the confidence of CEOs, it fell. As the conflict intensified, CEOs are calibrating their expectations, and their confidence has diminished. It's not total bad news that the index that we use is still above the 3-year average, but it did drop a bit in large measure, influenced probably by the conflict in Iran. So the return of uncertainty, um, as Tracy was saying before we went on the air, uncertainty is always out there, and it's a little bit up based on this survey data.
You teed up my question then, because how do you, like, what would reduce the uncertainty? I mean, we have joked, we have this, the highlight of my week is our weekly call. And we've joked on this call that you get rid of Iran, we're going to be in Cuba and we might be trying to buy Greenland, and energy prices, inflation is still sticky. So what would reduce it for them?
Um, the way I like to think about this survey is imagine CEOs running a small business and they get a survey and they write down their sentiment. They write down what their confidence is, what they're worried about, the decisions that they're contemplating making, the decisions that they were perhaps contemplating that they've decided not to do. And so I don't know that it's any one thing. If I put myself in the shoes of those CEOs, there's not one thing that is a source of data for them, but it's a whole host of things. And so yes, if it's not one thing, it might be another. One thing that our data showed is that CEOs are uneasy because customers are uneasy.
Mm,
And they're simply they're trying to run a business. And so
mhm.
they're trying to make plans. And as customers are reevaluating their plans based on the uncertainty as a result of the war in Iran, here are the practical things that CEOs are reporting in our survey. Customers are delaying their decisions. They're they're prolonging negotiations. They otherwise may have pulled the trigger. They're delaying on that a little bit. Um, Projects are being pushed back. Sales cycles are lengthening. We're simply measuring what the CEOs are describing about the world that they inhabit, and the sentiments and thoughts and plans that animate their decision making.
And oversimplifying it, Jeff, but really, if people are happier, if businesses are thriving, it just generates more economic activity,
Yeah,
right? And i.e., companies make more money.
yeah,
They can hire more people. But if people are not happy, slash, if they don't have confidence in the future, they're going to hold off, right? They
yeah,
may not spend as much. They may not travel as much. They may
right,
not invest as much in their business, right?
right. Exactly. If we think about just our domestic economy, our homes, we make decisions all the time. Hey, maybe we'll go out to dinner tonight. Well, maybe we'll skip it this week and we'll, we'll pause on it. That's a spending decision. Maybe instead of buying, just as you say, the examples that you gave, vacations, do we fly, do we drive, what have you. We make decisions as economic beings with respect to our own personal budgets. And small business owners are doing the same. They're making decisions either to invest or not to invest, to pull the trigger, not pull the trigger. And it's influenced by kind of how we're feeling. That's why we call it the confidence index. Confidence is a feeling. It's influenced by data, but it's at its heart something that we feel in our gut.
A
And
hundred
you,
percent.
go ahead,
Oh, I'm
Tracy.
sorry, Don. Well, just on that point, then in the report, like it said half of CEOs are planning a price increase. So at what point then does that destroy demand altogether?
Well, we don't. Um, we're not in the forecasting business,
I get
and
that.
then in the forecasting business. And I
but
think what you
but
and I think
it feels like an interesting juxtaposition, right? I mean, I get it. They have to increase prices because they're not selling products, so they have to keep the lights on. But at some point, and if the consumer's really stuck, do they stop buying?
yeah, yeah. And if I mean again, I think to a small business. Okay, my margins are being pinched. I need to feel like I need to do a price increase.
Right,
What can my customers bear?
right,
If I sell lunches, and my customers are used to paying, $10 for a lunch and then they're paying 11 or 12, are they going to think twice about going out to lunch? So it's really a bit of a bet, a bit of a gut, in many cases, decision. How much, how much of an increase can the customer sustain and still bring me business? These are the decisions, sort of the thought process that if we put ourselves in the shoes of a small business owner, we can kind of imagine, yeah, okay, and when would we stop going to lunch?
right.
If it's 12, 15, whatever, when would it affect our behavior? Small business owners are making those guesses, those judgments um, every day.
And Jeff, just because we'll say 50% are thinking about a price increase doesn't mean, to your point, they're going to be able to get away with it, are going to be able
Yep.
to implement it, right? They're just trying to figure out how to open a door the next day and
Yeah.
hopefully be profitable, right?
Yeah. We ask questions of CEOs that are both prospective, like, are you going to do a price increase in the next 90 days? And we ask retrospective questions. Did you increase prices last quarter? So we're
Hmm.
getting, it's not the same people, of course, and we can't say, well, 10 people changed their mind. But we are looking at the decisions and plans that they are contemplating and which they are planning. And we're also asking, okay, did you increase hiring or reduce hiring last quarter or last year? And they're giving us that data. And so it's a constant calibrating with those prospective inclinations, the retrospective accounts that they're giving of their behavior and their decision making to all craft kind of the picture that's before us. And it's a picture, it's a picture for Q1 based on data that was collected, during that 2 week defined period. And so it's constantly changing based on how the world is changing and the decisions and plans that CEOs have.
Have you seen an industry divergence as well? I mean, you mentioned the industrials, energy earlier. Are they more optimistic going forward than, let's say, the mom and pop bagel store down the corner? Because to your point, if you raise the price of my bagel, I might go somewhere else. Are you seeing differences?
We have that data. I don't have that in front of me.
Mm,
So let me the what I share just kind of in the interest of time is the national data. On occasion, I bring in the tri-state region,
mm,
which follows pretty closely the national. Some usually the numbers are a little higher. I attribute that to the proximity to the financial capital of the world being New York
right.
City. We also break out this data. So we break out this data based on MSAs, metropolitan areas, the tri-state being one of them. We also segregate the data by industry, and we do see some pretty significant differences among industries. And toward the end, when we get to, okay, what does this data mean, and what actions are CEOs recommended to make based on this data? Here's
Mhm.
here's the recommendations. And one of the recommendations is for owners to focus specifically on their industry and not to rely on broad macroeconomic headlines. That there are significant differences. Industries are being impacted differently. I have a member of one of my groups that is at the center of the storm. They broker people who have ships with people who have oil that they need to ship, and they're brokering the ships. They are right smack in the middle of the Strait of Hormuz turbulence, and there are very few industries that are more directly impacted than that. And then there are other industries that are more insulated. That's an extreme example of one industry that's being hugely impacted. And we certainly have that data, Tracy. I don't typically bring that to this, but there are some pretty wide divergences. Just that one example,
All right.
illustrates, the bagel shop and then a shipbroker.
So Jeff, I'm going to try to sneak in one more question before
Yes.
our break. But I remember when you showed us this survey over a year ago, we had a big rise after the presidential election in
Yes.
confidence, and then a big drop when the tariffs were announced. This, you would think in the middle of a war, especially affecting energy and higher gas prices. You would think the most recent survey would have a bigger drop in the confidence. Doesn't seem like that number. I mean, it was lower, but not dramatically lower. What do you credit that to?
I think the sort of mixed news, and we did ask some questions about tariff uncertainty. One of them was we asked members, again, these are CEOs of small businesses, do you expect the Supreme Court's ruling about the tariffs, do you expect it to impact your business? Um, and interestingly enough, only 30% thought it would, which suggests I don't quite know what to make of that. Um, and we also asked how the changes in tariffs specifically impact your business. And I think it's a mixed picture. On one hand, it looks like small businesses may get those tariffs if the Supreme Court ruling plays out the way they decided it. They will be refunded or reimbursed. And there's uncertainty about whether they will or when they will or how much they will. And so, yeah, if you're a small business owner, the Supreme Court decision was good news, but you're really not quite sure how that's going to impact you. And I mean, I have heard on other shows, CEOs talking about, do you think you're going to get your reimbursement? And, they say, well, not sure, or I'm very sure. So I think that accounts for your question that it's a little bit of a drop, but there is some actual potential positive in the midst of it all.
Tracy, looks like we have time for another question. You want to sneak one in?
Yeah, sure. I mean, I just based on what we're saying, I just like my head hurts thinking about the being a CEO of a small business, the decisions that these poor people have to make on the regular, and the variables change. Everyone keeps moving the goalposts on them, and we haven't even talked about, insurance costs are up, banks are tightening lending. Like we were talking about credit card delinquencies earlier, and that's even for businesses, I'm sure, not just the consumer. And so making decisions going forward, how do you see, or can you tell from the survey, how do they see the rest of the back half of the year?
Um, so uh, what we what the data is pointing to is an expectation on the part of CEOs, the sentiment of the CEOs, for mild growth in 2026, with a more challenging 2027. That's the
Mm.
picture that this seems to suggest. Again, that's based on a lot of data. Um, that's not a forecast by any measure, but if you take what the CEOs are saying now, they're expecting a mild growth for the balance of this calendar year, with a more challenging year next year.
And again, back to the same point I made earlier, Jeff, if I look at your data, yeah, recent future economic growth is a little bit less than they originally expected. Revenues are a little bit less than they originally, but not dramatically
Right,
less.
right.
And
Right.
I think that was probably the most surprising thing I got out of reading this report. I would have thought, given the uncertainty of war and higher energy
Right.
prices, that business owners would be more pessimistic.
Yeah, I read it in the same way you did, Dom. That I was very curious. Okay, what's it going to show, given that the data was collected when it was collected, and it could be a lot worse.
Hmm.
Could be a lot worse. But the sentiment, and the other thing about small business owners, I work with a lot of them. They're a pretty resilient bunch.
Right.
They have to be agile in their decision making. They have learning agility, because they're just making decisions day to day, and they're able to pivot in a way that some larger companies are not able to. So they're a wily bunch and a gritty bunch.
because we have to survive.
Yes, I love that. And that was I was leaving the door wide open for you as a small
Thank
business
you.
owner.
And I
Yeah.
use the word we because me and Mike joke about it all the time. We are ourselves a small business, and
Yes.
and I want to get into the employment numbers right after the break, but laying somebody off genuinely hurts your heart, right? You
Yes.
don't want to do that if you can help it, and God forbid, lose clients. So let's take a break here, and we're going to pick this right up on the other side of the break with Jeff Oak from Vistage and our friend Tracy Burns, who's helped me out tonight. Good evening. This is Dom Tavella and Tracy Burns again from the Lebenthal Report with our friend and guest Jeff Oak. So, Jeff, we kind of left off with the mood of small businesses. I want to spend a minute on hiring. Are we starting to see some hiring? And I'm particularly sensitive to these college grads who seem to have a little bit of a hard time finding a job. What can you tell us?
Yes. So my headline here is that managing talent is the biggest decision and the biggest challenge for small businesses right now. So, one thing that our data shows is that quit rates have kind of stabilized. They're actually back to 2017 levels, which would be pre-COVID. Um, and that translates as retention is higher. Um, when employees feel less secure, they're not likely to change their jobs as quite as fast as they otherwise might. And so employees are hunkering down as well a little bit and saying, "Hey, it's not such a bad gig. I'm gonna stay here for a while." Um, so quit rates have stabilized, retention is higher, and that's sort of that's one piece of news. Another piece of news is that hiring for small business CEOs is the biggest challenge, and we're seeing a couple of things. Um, the talent market is beginning to shift a little more in the employer's favor because
Mhm.
retention, and the things that I just mentioned. However, there's a however everywhere in this data. Skilled and specialized roles remain extremely difficult to fill. So the skill roles really tough to fill, and in general, the workforce in its totality, the retention is higher. Fewer workers are changing jobs, and there's an interesting thing. We talked, I don't know, 2 or 3 quarters ago, maybe almost a year ago, Dom, about the role of AI. What was the rate of adoption? And we did ask questions specifically around asking CEOs, are you incorporating AI into hiring decisions? And interestingly enough, 4 out of 10 CEOs are not incorporating AI into hiring decisions, which mean 6 out of 10 are.
Right.
What we are seeing more broadly is that AI fluency is moving from nice to have to essential. And AI increasingly is embedded in every single role. It's not like you have an AI job. AI is permeating all jobs. So we're seeing some interesting trends there that we're going to keep our eye on. The big takeaway here that I just want to lead with your audience is that there's one fundamental that remains constant. Great companies are driven by a great workforce. And those companies that position themselves with strong talent are going to outperform the companies that are not. We see that in survey after survey after survey, the importance of good hiring practices, providing a workplace that people want to stay, and developing those individuals. I have 25 middle managers who have started a training program. They're 25 employees who are members of my CEO's companies, employees of my CEO's companies. That shows the commitment of those CEOs to develop their middle managers. That's a big number. 25 brand new middle managers getting leadership training, and they're all over it. It's really cool.
It's super cool, but I see everything you just said in my own little microcosm at home. I have kids in their 20s. When they were in school, it was kind of post-COVID, little cockiness to them because there's lots of jobs and we're going to work from home and it's going to be great. I'm going to have this really, cushy little life. And now all of a sudden, I have daughter in accounting, son in finance. My son actually asked me to speak to one of his friends the other day. There's no finance jobs. Now everybody's holding on to their jobs for dear life. These kids are not looking to jump around. They're looking to stay and make sure they get good reviews. So I think it also is helpful for the employee. Now the employee's stepping up and trying to do the right thing and doesn't want to get laid off the next round because it's scary because they happen. It's
Yes.
all over the place, right? So I think there's still that. Do you think the hiring will start to increase though come the end of the year if we are seeing optimism increase?
Like a lot of the topics, it's a mixed story about. I don't know if I included the data point here, but actually, yes, that there's a slight decline in the number of CEOs who are planning to expand their workforce in the next 12 months. It's dropped from 57% to 51. So still, half of CEOs are planning to expand their workforce, which is
It's
good
encouraging.
news. Which
It
is good
is.
news.
Mhm.
Hey Jeff, I'm kind of hearing a weird commentary from some of my own clients, small business owners, where they don't necessarily need to hire the next person, but the kind of quality individual that's coming through the door, they're like, I might have to just find where somewhere in a budget to hire this person because I wasn't able to hire this person just a couple of years ago. I couldn't find that qualified person out there. So I almost counterintuitive where I don't necessarily want to hire somebody, but these quality individuals now are available. I need to grab them before somebody else does. Are you hearing anything like that?
Yes, it's a great question. And let me give a
Mhm.
very specific example. Um, there's a fundamental dynamic. One of the fundamental dynamics when you're a small business owner, and you've experienced this, I'm sure, is do I hire when the after the growth comes, or do I hire so that I'm ready when the growth comes if we can handle it? I have one of my members who was debating that exact question, and he asked, "What's the right answer?" And I asked him, "What do you think the right answer is?" Because it depends on your industry, it depends on your risk tolerance. But one of the takeaway items bears right on your question. Um, our recommendation based on this data, what sort of emerges from the data, is the value in using the near-term slack to really build workforce capacity ahead of renewed demand. So skate where that puck is going, because remember the specialized talent and the more senior talent is harder to the highly skilled and highly specialized are harder to recruit. So if you got somebody like that, go grab them.
Grab them.
It's not counterintuitive at all, because you don't want to be, if you just take a restaurant, you don't want to wait till the crowds are there and you realize you don't have enough staff, because the crowds won't come back. And that would be the case in many, many other industries, is you want to be there to handle it so that you can keep it, the volume.
But how do you do that when you're counting pennies? I mean, how do you do that when you have, right, all your your inputs are going up, all your costs are going up, and you see like this perfect candidate, I really want to hire you and offer you a better benefits package than, let's say, Goldman Sachs, but I just can't. I mean, I have to believe they're in that place too.
Yeah, it's a great question, and like this has been a theme kind of with the over the course of our time together, is how do they make that decision? And the only thing I can say is carefully, you know.
Hmm.
Um, and I often ask a variation of your question. How do you do it? Like, you know, how do you make decisions? And decision making is very complex. I mean, there's a gut element, there's a data element, and then there's a perspective element. You can't rely on intuition alone. Sometimes data helps, but it's not quite sufficient. But it's talking to other people, like with the power of peer groups, is getting perspectives. Hey, I'm thinking this. What are you thinking? I'm worried about this. What are you? How are you approaching it? So the data that we're seeing here, we're kind of witnessing a conversation among, I think this survey panel was, I don't know, 12 or 1300 CEOs. We're sort of listening in on a big conversation. They're not actually talking to each other, but they're answering questions, along with a whole bunch of other CEOs that are answering the same questions. And it is, in a way, a conversation about how they make those decisions.
Jeff, I would argue though that, and we've seen it in our industry, there's a huge consolidation in the financial services industry, and a lot of people are getting laid off. I think part of the answer is there's not a lot of wage pressure. I'm not seeing where you have people coming in demanding outrageous salaries. In fact, they might be a little bit softer in their requests and a little bit more willing to accept a more reasonable salary. So, where do you think wages are going?
I think it's a tale of two cities. There is the highly skilled, highly specialized roles that are very hard to get, very hard to keep, who can demand top dollar. And then there's a lot of the, and then it's a different story with less skilled, less specialized roles. I mean, I have all kinds of small businesses, every kind that you can imagine, and there are some that have extremely, extremely specialized, highly, highly skilled roles, and they're paying top dollar, because those people are very hard to find and very hard to keep. So I do want to, before we, if can we pivot to the
Yeah,
sort of the takeaway?
absolutely.
I've been
Yep.
kind
Yes.
of,
Mhm.
you've been asking, I've been kind of itching in my seat. So you've heard me say on other episodes, the way I think about data, I learned from a wise friend who said, when it comes to data, there's the what, the so what, and the now what. Okay, the what is the data. It's actually the survey results in this case. The so what, which is what it means, and that's what I've been kind of that we've been talking about. Here's what the data means, and some parts are ambiguous. We're not quite clear. And then the now what is what do we do with the data? Okay, and so on each of our surveys, I like closing with this because it's really it's the leaning forward, the action element here, and we have five key actions to take away from this data. And my overarching title for this one or quote is engagement over paralysis. You've sort of touched on this, Dominic and Tracy, when you talked about, well, how do people make decisions? And, how, do you keep your powder dry? Just kind of wait for things to unfold. And our recommendation is don't be paralyzed, but engage. And five examples here. The first one I already mentioned is expect some mild growth in 2026 and recognize the possibility of a more challenging and the likelihood of a more challenging 2027. So that's an awareness item. The second thing, and I'm going to illustrate this with an actual conversation I had earlier today, evaluate, CEOs should evaluate capital investment with short payback periods, um, and try to avoid long-term financing costs as the cost of accessing that capital is elevated right now. I had a member who was contemplating buying a property that he had had his eye on for many, many years for the business. And the owner came forward ready to sell. Any other year, he would have jumped at the chance. In this case, he said, I'll pass. And it was because of the cost of financing.
Higher
And,
interest
and
rate
it,
environment.
yep, yep.
Yeah.
So that, and I said to him, that decision illustrated, because I told him that I was going to coming on the show. So uh, wait for better terms for particularly large and longer term financing opportunities. Third, plan for inflation to accelerate, especially in energy, food, and goods. Um, and protect margins and revisit your pricing policy. Just look at what you're pricing in relation to your costs. Um, Fourth action item relates to labor. And we touched on it a moment ago, Dom, in answer to your question. Use the near-term slack to build workforce capacity ahead of demand, and then to focus your strategy on your segment. Don't watch the broad headlines, the macroeconomic stuff. Really be looking at your industry and the forces and how they're being impacted because it's a very, very mixed bag across many different industries. Those are five um, actions in the now what category. Now what do we do? Here are five things for people to tuck away.
Yeah, stay in your lane, right? I mean, I hear that all the time. And to your point about evaluate capital investments, I mean, thanks to the One Big Beautiful Bill Act, you can expense a lot of stuff. You might as well take advantage of that because the next president will come in and take it away. So there is planning even around that as well, right? They have to make decisions even with that.
Sure.
So that again, the variables change. They move the goalposts. This is not an easy climb.
Yeah.
Like Dom said, you got to have your happy hat on every day, or
Yeah.
you won't make it to the office.
Yeah. Well put. Well put, Tracy.
So just coming back to the survey and your advice, the resilience of the small business community is just nothing short of astounding. It
Right.
really is remarkable. One of our guests last week talked about new business creation, and it seems like it's at an all-time high. So, are you getting a sense of that through your survey that people are generally optimistic about starting new businesses? Do you get involved in any of that, Jeff?
This particular survey did not explore that precise question. It's a good one. It's a good one. I think my guess is given that the theme is the return of uncertainty. Does that cover starting new business? Maybe it does.
I don't know, Jeff, but it is kind of reassuring to me that the entrepreneurial spirit is not dead.
Oh,
The
no, not at
power of
all.
small
Yeah,
businesses in this country, I don't think you talked about some of the statistics about new hiring and economic growth. The entrepreneurial spirit in this country is literally what makes this country great.
absolutely. Absolutely.
And
And I
and
get to,
I,
go ahead.
I'll add that since over the last year, I think post COVID, female entrepreneurship is back up
Yeah,
because it is getting more and more difficult to work and raise a family and do all the things that women are just starting to say, I'm doing it myself. I'm going to do it on my terms. I think it's amazing and empowering. But I also think that this, what makes the survey so interesting, it's almost like writing a dear diary, right? This is how they felt today. Ask me all these questions maybe 2 weeks later. Maybe things would have felt so much better. It's very interesting because
yeah,
it's a moment in time.
yes, it
I think
is.
it's right. It's really cool. It's a
Yeah,
capsule of like what's going on today.
right, right. Yeah, yeah.
Hey,
So,
Jeff, I know we have another minute, but I would really want to give you an opportunity. If somebody wants to become part of your organization, I think the value is just tremendous. How do they go about doing that?
so they can find me on LinkedIn, just Jeff Oak, OAK, and the first name is Jeff, Jeff, and I'd be happy to chat with folks. I lead 7 groups. I work with about 80 small business CEOs and owners from every industry you could imagine and every size, from 1 million to 300 million. And so it's a tremendously diverse community. And I love what I do. Love working with small business owners, and just feel really, really blessed and lucky that I get to do this. So, and
I can't
yeah.
thank you enough for having us on. And Tracy, maybe you want to spend a minute because I know you spend some time with a group of female entrepreneurs. Talk about the value of having that camaraderie and people that you can bounce ideas off of.
I was just thinking that it's like business therapy because you sit around, right? And as opposed to complaining about your husband or your kids, you're complaining about your business, but yet the benefit and the value of speaking to other people. They have ideas, they share them. I think, Jeff, the peer groups are just so cool and would
Yeah.
love to be a fly on the wall one day and check one out because
Yeah.
women I know, there are so many female founded groups out there for this exact reason. We need each other, we need to talk to each other, and you need to know you're not alone out there.
Yeah. We call it the power of peers.
Love it.
The power of
Well,
peers.
Jeff, I think we are pretty much running out of time. I can't thank you enough. You're bringing us real-time data, real-time insight in what's happening with the economy, what's happening with small business owners. And honestly, I think it's real value added. So really, really appreciate you taking your time, sending us this survey. And I hope for our listeners and viewers, reach out to Jeff. I think it would be tremendous insight and might even give you a little therapy session in how to make your business grow.
It's my pleasure, Dom. Thank you so much.
On that note, thank you all, and thank you, Tracy, for joining me tonight.
Thanks for
Everybody have a
having me.
great evening. Be safe, be healthy, and we'll see you next week on the Lebenthal Report.
Okay.